Good afternoon, sir.
Okay, it's actually the lecture should be scheduled to be given by Dr. Loganathan, but unfortunately he is not available. He's gone to Jaffna and he's unable to come. He's stuck there. So since we had to finish this course, I was supposed to take up this session as an alternate lecturer. Okay, so I'm just using his slides and handouts, the presentation of Dr. Loganathan. But in between, sometime I'll be certain clarification, certain uh, additional things which is not in the slides will be discussed. So you may take down those things. Sometimes some areas may be my presentation is different, but I don't want to change the flow of the program. That's why I'm using his Dr. Loganathan's handout slides to be discussed. What is lending, principles of lending, and how we go about lending principles, basic structure. What are basically what we should know about lending? Okay, so basically, lending is a business. Banking or finance institutions is a business, right? So, as a business, our main objective of any organization or any business organization, objective is end of the day we have to earn a profit. So our lending business also targeting for earning profit. So our profits are coming out of the way of interest. Therefore, the basic criteria we are looking to the lending proportionate is the quality of a loan. What's the quality? How to lend a quality loan? What are the principles of quality lending? What are the guidelines for quality lending? That's what our entire structure for this module for you. So what's a quality loan? Any proposal, there should be, we have to see whether that loan is should be easily paid back by the borrower, customer. Customer can pay back the loan. That's a basic criteria any lender looked into when they're granting a facility for loan. So quality loan means according to the schedule, according to the contract between the lender and the borrower has to be fulfilled by the both parties. It is called a quality loan. Okay, so what is this? But quality lending, therefore, there are certain criteria you have to understand how to become a quality loan. What's the quality? And the principles of quality lending, right? So we discuss in detail what are the principles of lending to make it a quality lending. What are principles to adopt? Also, there are certain guidelines from the internally, externally to handle this business. Internally, the bank or the lending institution have their own policies, credit policies. We call those credit policies. So we have to follow those credit guidelines. Secondly, we have to follow the external guidelines, that is the controlling of monitoring agencies, that is central bank guidelines, as well as the income tax guidelines. Likewise, number of other external factors are affecting our lending. So we have to follow those things also. Therefore, the lending business seems to be very simple overall. But when you go in detail, it's very depth. Depth is very, very large. Depth is very, very large. Certain principles are there. It is going beyond our boundaries. So, depending on the size. So, that we are going to discuss in general lengthily. Okay. The primary function, what is a commercial bank and what is a business? Right? Now, what is commercial bank? And what is a business? Commercial banks basically, if you look at the banks there are two types of banks according to the central bank classification. One is commercial bank, other one is specialized bank. Licensed commercial bank, licensed specialized bank. Then there are certain financial institutions also, they are registered under the central bank business. So basically, lending business, before we go to in details of this nature, uh, let us see the legal background of lending. Legal background of lending. Lending business is monitored or uh, followed up by Central Bank of Sri Lanka under the supervision of Banking Supervision Division or uh, non-banking supervision division. That's for finance companies and other non by commercial banks are governed by. So basically, legally, there's no restriction for lending. Anybody can lend. Anybody can lend. There's no restriction according to central bank specific guidelines. There's no restriction for anybody can lend. Right? You might see that street lenders, right? And there are certain types of lenders. There are no legal what you call limitation for the lending or deciding about how much to lend, how to lend, whom to lend, and the interest rate, or how much of interest rate we charge. There's no basically regulation to cover up. So anybody can lend any amount, anyway, according to their funds available. When it comes to institutional lending, right, specifically commercial banks, specialized banks, finance companies, when they lend, there are certain interference by the central bank, not directly, but indirectly. The central bank indirectly try to control the lending. Why? They are not directly lending. According to the central bank, what do you call banking guidelines, they are making controls. Limitations, sometimes you may find, sometimes central banking guidelines not to lend to this sector or limit to sell to this sector. This is only maximum percentage can be go. Likewise, sometimes interest rates are sometimes be monitored by the central bank. Why the reason? What is the ultimate result of lending? Lending is a function where we are creating money. Financial institutions are creating money. That means foreign deposits, we can create 9 times of advances. Who have learned economics, they know that principal banking activities, the bank can create funds 9 times. So what will happen if we allow to create funds like that? What will happen to the economy? Money supply will increase. It's called M3 money supply. When the money supply increases, according to the increase of this money supply, on the other side, right? There's a certain amount, what you call supply also has to be increased. It's like demand is created by more money supply is put into, a lot of money put in, pump into the system or the economy. There should be goods and services to purchase by that money. People have money, there should be goods and services to purchase. Otherwise, what will happen? Price levels will increase. When the goods and services are lacking, demand is the supply is low than the money supply, what will happen? Definitely, the price levels will go up. When the price levels will go up, the inflation of the country is increasing. So the prime function of the banks, the core business, we are lending. The lending will create negative impact to the economy. Negative impact to the economy. Therefore, the central bank is intervening in lending. That's also that's a direct law related to this controlling of lending, but indirectly central bank trying to control because it will have a impact on the economy on the other side. So therefore, central bank is always interfering in the lending business of the banks and the specialized bank and the finance companies. That's one of the main reasons. Secondly, what is the primary business function of a commercial bank? It's the core business. It's called financial intermediation. What is financial intermediation? We mobilize the deposits from the surplus funds in the economy and lend to the needy borrowers. Any financial organization, main function or the primary function is mobilizing deposits and lending. Mobilizing deposit and lending. Now, this intermediating function has been legalized. There's a legal background for this. The banks are authorized to do this job under the Section 86 of the Banking Act number 30 of 1988. Banking Act number 30 of 1988, Section 86 says banks are, the primary functions are mobilize funds from the public and invest those money in lending business or other activities which has been banks has been approved to do. Okay, right. When it comes to the first part is, so you lend mobilize funds from the depositors, right? Mobilize deposits from the depositors, collect funds from the depositors, and you can lend. And say the second chapter of that act says mobilize the deposits payable on demand. You mobilize the deposits, but it has to be payable on demand. Whenever depositors ask for the money, banks and financial institutions has to be paid back. Bank Act comes on for the banks. So specialized banks and commercial banks has to pay back that money demanded according to demand of the customers who deposit the money. Therefore, when the banks try to use deposits to create money, one side is affecting the economy. On the other side, what will happen? When you expand the paper money, paper book entry, the assets has been increased. Yeah, there's no money. Actual money is not there. It is created money on the balance sheet. So whenever a customer comes and asks for deposits, the banks does not have money to pay back. Then what will happen? The bank will collapse or becoming bankrupted. And that is why the second reason central bank is trying to control lending. Why? If a bank liberally lend drastically, what will happen? Whenever depositor comes and asks for their funds, if the bank cannot be fulfill that requirement, bank will collapse. If a bank is collapsing, that is a very big impact for other banks and it will spread it and entire banking industry may collapse, entire economy may collapse. Therefore, central bank is intervening for two reasons in lending. Right? Basically, there's no law. There's no law saying how much to lend, what to lend, how to lend, to whom to lend, how much of interest should be done. There's no law at all, except for one instance. That is for owning business. Other than that, there's no legal structure. But the central bank has been empowered by their legislation to monitor the financial sector called fiscal controls by managing this bank's activities which will not affect the one side to the economy. It is second in both sides. One is directly involving with the money supply increase, and the supplies is not to increase, price level will increase. On the other hand, what will happen? Yeah, on the other hand, yeah, what I told now, that will depositors' money when they ask for their money, banks should be able to pay back because we have collected money on demand. Maybe you have collected money on a fixed deposit for 5 years. Customer has agreed to keep the money 5 years with us. But according to law, if that's his money, he can demand at any time. So we should be able to maintain that position. Otherwise, we will withdraw. Let us go back in the history what has happened. And remember Pramukha Bank? Story of Pramukha Bank. What has happened to Pramukha Bank? They have lending is more that they created money for lending than the depositors deposits. When the depositor come ask for the money, they could not pay back. Then the Pramukha Bank was collapsed. It can happen, right? So therefore, you'll understand the prime function of the bank is to mobilize deposit and lend, which is under the control of or the indirect control of central bank. For deposits, central bank directly involves. According to the Monetary Law Act, according to Monetary Law Act, that is central bank, the circular, the established, according to, without a license from a central bank, no one can collect funds from the public. You can't mobilize funds without central bank authority. You have to get a license. Without a license, you can't do that. It is law. But for advances, there's no law. There's no such law. Okay, understood? So that's the basic legal structure of our lending business. Right? Like this core business. So why should we lend? To get an income. I told earlier, the main objective of any business organization is to earn a profit. So there should be the income, is the interesting income has to be there. So when you go for quality lending, we are looking at these factors. Right, since it is not here in this slide, there's one called disintermediation. There are two types of financial intermediation. One is financial intermediation, other one is financial disintermediation. Okay. The financial intermediation means the institutes, organizations like banks, finance companies are intervene to collect deposit from the public and give credit credit loans to the borrowers. So that's called intermediate function. This intermediation this function is removed. The role of the banks as intermediator will be removed. When intermediate removed, what will happen? Right? Depositors and borrowers will meet each other directly. In other words, whoever wants funds, that means loans, we call this borrower. Whoever wants to borrow funds, they can directly go to the market and collect funds from the public without intervening of the banking sector. That's called financial disintermediation. Right? So what is the methodology used for this financial disintermediation is using financial market instruments. Using financial market instruments such as commercial papers, debentures, corporate bonds. There are a number of money market instrument has been created depending on the size of the market, need of the market, they can sell this in the money market and collect fund directly without intervention of the banks. So that's called financial disintermediation. Okay, you understood? There are two. So now we are not talking about the disintermediation. This is a separate advanced diploma. We discuss those things, right? Now we discuss only the financial sector intermediation. The other they meet each other's requirement. Right, mobilization deposit and give that money back to the required people. So to get an income. Okay, what is a quality loan? The quality loan defined by the eminent bankers is there are certain criteria to be fulfilled. Number one is loan should be used for the purpose of which is granted. Whenever a credit facility or a loan granted for a customer, borrower, borrower should utilize the funds for the purpose which are given to the customer, for that purpose. Right? So therefore, always lenders has to carefully monitor whether the borrower has used the funds for the purpose which are given to him. For follow-up. Supervision, follow-up and monitoring we needed. Why? To see. Why that? If the customer not use the funds for the purpose which have been given, he may not be able to pay back the facility loan as we made according to our agreement. So he has misused the funds, he has not generated any income to pay back. Take an example. Now, most of the business customers coming and asking funds for business, improvement of business. So if we grant a facility, purpose of improvement of business, that money should be used for the business purposes to buy inventory. So therefore, we should be able to monitor going through their books, customer borrowers' books, whether the stock has been increased. We go through the invoices to see whether customer has purchased the goods for that from the funds, and make an inspection of the stock levels, whether stocks has been increased, whether cost of goods sold has recorded, cost of goods has been increased, volume of sales has been increased. So these are methods of checking. Okay, so for the purpose we have to use. Otherwise, what will happen? Customer may not be able to pay back that loan because we are looking. For example, for your granted facility improvement of business, he should generate sufficient cash flow to pay the loan. So we had wanted that. That's number one criteria needed for quality. Second one, the transaction cost, both parties should be reasonable, bank and the customer. You may see sometime, certain time, the customer require facilities, but the transaction cost is very high, very, very high. It should be reasonable according to the need or the requirement of the customer as well as the bank, both bank and the customer. What is the transaction cost? Now, for example, you take a customer wanted loan. So loan has to be secured by some asset. Asset has to be mortgaged to the bank. That's a legal requirement. When we need the asset to be mortgaged to bank, there are a number of activities taken before the facility is granted. That is, bank need the customer to take a valuation report from a prominent valuer. You have to pay for that. Secondly, if it's a property mortgage, we have to see whether the property is freely transferable to the bank or the transferable. There's no in between parties interruption or interaction in between. Therefore, it should be a clean title. So that spend the legal fees for that. Then the documentation cost is very high. Mortgage bond, paper mortgage bond, that's a stamp duty, and the registration procedure, and the legal fees. when it comes to all these expenditures put together, right? The amount of your loan and the tenor period should, what do you call it, should be justifiable, otherwise useless. What they use here want to short-term facility, for example, 1 year to repay in 1 year, right? If you're going for a property mortgage, what is the cost involved in that transaction? Is very high. Therefore, it should be reasonable. So that's what we see. Depending on the, when you discuss later, when you select the customer's request for a facility, we have to match the facility, the risk in the facility, and take a proportionate, appropriate collateral. It's called security. Appropriate. Low cost, appropriate one you select without having cost to the parties. That's the second call. Third one, loan should be repaid together with the interest on the time and agreed upon the receipt. How? Loan should be repaid. Now, the first question we are going to ask for the customer, any kind for credit proposal, how he is going to pay back the loan. What is his income? Is this a salaried employee? Yes, we go through this salary consistency, whether his job is permanent, how long he can work, his age, right? And if it's a business, whether the business can generate profits, sufficient cash flow to pay back the loan. So this we call repayment ability. We'll discuss later in detail. So repayment ability should be the first question we are going to analyze as a lender with the customer having sufficient funds, right? Present as well as future. Why? We are granting a facility to recover, we are granting a loan to be recovered on future date. Therefore, the future cash flow must be established carefully. Future cash flow, future income of the customer has to be worked out as anticipated cash flows. When you give evidence that anticipated cash flow can be obtained, then only we can go ahead. So that's the third criteria, is repayment ability of the customer. Then it should bring reasonable profit to the bank. Bank, normally I said earlier, bank is a business. Banking is a business. Therefore, we should get a reasonable profit. Otherwise, that lending proportionate is not profitable, it's not a quality loan. Normally, we are not going for that particular loan. As per reasonable profit. Right? So, it means that the loan should have to be evaluated, granted, and recovered effectively and efficiently. This is a very, very important part. Credit, we call this part. It means that the loan should be evaluated, granted, and recovered effectively and efficiently. This is called credit appraisal. We do a credit appraisal to establish whether this credit quality loan is have a repayment ability as a quality loan. Okay, the criteria is very, very clear. Next is lending proposition, that is lending requirement. Right, now this is something very important to understand. In the current context, is very, very weak. The credit requirement, we call specific lending or borrowing proposition, should come from the customer. Customer has to make a proposal for a borrowing. That is the conventional banking methods. All we are applying that customers are normally come to the bank or institution and request for a facility. That is a normal conventional practice. But at the present context, present environment, it has been little change. You heard about marketing. What is bank marketing? Hmm? Marketing means you find it marketing, try to improve the sales, increase the sales. So to increase the lending portfolio of the organization, institutions, there are certain activities the marketeers has been proposing to do. But one thing we have to understand, this is one of the principles I personally believe and apply. You cannot do marketing campaign for improvement of lending. To increase your lending portfolio, you cannot do any marketing campaign like deposit mobilization. You go to the customer's house and house to house and mobilize, tell that customer, come, we'll give so much of interest and these are the benefit. If you open this much, you give this of gifts and all, and annually we will do this thing, all this, the what you call interested sugar coating is given to the customer, to the product, attraction to the product. What is the attraction in the lending? Only one component, that is speedy lending, will not drag. So therefore, the marketing proportion is not applicable for lending. Lending propose should come from the customer. Yes, of course, there's something else very important here. The marketeer in the bank marketing, bank product marketing, specifically lending product, what we can do is there's avenue for that. That is called you create a market. Okay, you create a market. So that means what for the lending proposal, you expand the market or a segment of market issue, you create a market. Once you create a market, you can expand your lending portfolio. Because there's a need. When you create a market, you create a need. You create a need among the borrower. So you can increase. So it is the lending again come from the create a need to come from the customer for the proposal. Right. To clear this factor, I'll give a small example for you. Now, all of you are very young, younger generation mostly. These days, you are very, very involved in the most of the political scenarios. For the last 2 years, you have been observing certain criteria, political promises and that and this they are going here and there. Now, what is the impact on that in our banking sector, our particular subject? When the particular subject I'm talking about, creating a need. Creating a need. That means even last regime, last government, Ranil Wickremesinghe government, the need has been created through certain loan criteria. That is, they label it as Enterprise Sri Lanka. They label it as Enterprise Sri Lanka. So new generation of entrepreneurs had been created in that Enterprise Sri Lanka. Export-oriented products, import subsidies, then what do you call, without sending basic basic product to export market, value-added product to be sent to the market. Likewise, the creation has been developed. Now, Saubhagya Dakma will have taken over that. Saubhagya Dakma of the Gotabaya Rajapaksa's regime, president, taken over that within a different label. Whatever political gain, so we have a business. As bankers, we have business. What our job is to grab those business, create business out of that. So we identify potential customer borrowers, entrepreneurs. You develop the entrepreneur, become your future customers, future lending customers, borrowing customers. Right? That is what the today's market you are expected to do. Okay, right. Second one is when the customer wants to borrow, bank must reach decision about whether to respond favorably or not. Normally, whenever customer comes, each and every customer's request we cannot accept. Sometimes we may have to drop. Right? So I told earlier the basic criteria is whether customer can, if you're going for a business facility, business loan, whatever business loans, it can be a semi or trading business or import export trade, whatever it is. Right? If you borrow this money, invest this money in the business, whether it can generate a return. That means cash flow. Whether the cash flow is sufficient to pay the loan installment. That is the basic criteria. The first. Secondly, whether any legal barriers or obstacles for entering that customer. There are certain legal barriers, obstacles are there. So we have to see those things overcome. Thirdly, external factors effective for that. External factors, environmental factors, political factors, then legal factors, with the effect in that proposal. Right. So basically, these areas has to be evaluated, and we are taking decide. If the proposition that really requirement is bankable, we call it, when you use the terminology, the bankability. For that only we are doing analysis. If it's analyzed, if it's can be accepted, we accept as it is. The proposal will be accepted as it, without any change. As it is, we grant the facility. Right? In the most of the instances today, most of the bankers, lending institutions, apply this principle, but not going to any details, because there are certain other criteria put forward by the banks, and whatever proposal comes, you try to accept, try to grant it facility. It is not the way. It has to be evaluated, and the bankability has to be established. Its repayment ability, and India has no legal obstructions, external factors affecting the customer ability to overcome those things has to be released. Or else acceptable with some changes. Sometimes you may find the customer without any analysis, request for a facility. Right? Request for facilities. As a banker or a lender, we have to see that that proposal is workable within that quantum of facility, whether it's workable, can we do it? Whether the customer can carry out that business or the activity with that money, what is expected from the bank. If not, if there's a shortfall, who will be fulfilling the shortfall? If the customer has sufficient funds to bridge the gap, then okay, then you can accept as it is. Or else, you have to change the requirement. Do certain changes. Or if a customer is asking more funds than his requirement, then you tell the customer, it's over-financing, under-financing, both are dangerous. Over-financing, under-financing. If a customer given more money than is required, it's dangerous. Similarly, if I give the money or loan less than what is required, it's also dangerous. then you have to do such measures. Either you increase the loan portfolio, or you have to reduce the customer's business activities into match with the customer's need. That's called changing, accepting. Third one is sometimes you may not cannot go ahead with this customer. It is not workable. Customer's proposal is not workable. So point blankly, we have to reject this application, not acceptable. Reject application. Now here very, very careful you have to, as bankers. First to anyhow customer may satisfy and accept it, but when you reject it, customer may not happy about that. So you have to find the ways how to reject it. Now, for example, customer wanted to get a facility, but the collateral which is he is offered is not chargeable to the bank. There are certain legal obstacles. So you cannot go ahead with that proposal. Right? So likewise, certain criteria of lending is not fulfilled, you can accept it. There are sometimes certain customers are coming for facilities, they are overage. So according to the bank practice, over 60, we are not entering for individual facility. Should be go for a joint facility or has to be somebody where as a co-borrower to back up. Because it's like, well, we know that life expectancy levels in the country has been increased to 78 years of age for a male. But still for all, banks have certain policies. So you cannot accept, you reject it. Right? So therefore, lending proposition as it is, are you accepting or going to do certain changes or not accept at all? Right? So we have to take the decision. The borrower's proposition, the customer must make clear to the bank, very important, that 4 areas, how much he needed amount. That as the bank has to calculate and find out whether that money is sufficient. Whether the customer can do the proposed business or the transaction or the improvement with that amount. That amount is sufficient or not. So bank has to calculate and find out how much of amount he needed. Secondly, purpose. But purpose is asking the funds. There are banks of funding, there are two purposes. We are lending for business customers, we are lending non-business customers. So non-business customers, we lend for non-commercial activities. Non-commercial activities. We label it to criteria is the consumption facilities. Specifically individual or jointly, they are given for consumption purposes. Residential housing loans, with marriage expenses, right? Likewise, by purchasing a vehicle, all these things are personal use, are non-business activities. Therefore, purpose is acceptable. The other one is business purpose. So any activity for business purposes, it should be what you call prudent of repayment source. Purpose of lending to business organization should be able to generate an income out of that. Consumption loan, we are not expecting to generate an income. We are granting a facility based on their existing income. When the business facilities we are granting, it should be productive. The word they use, productive. Business customers has to use loans for productive purpose. Productive means it should be able to generate a cash flow, a profit. Otherwise, that investment is not practical. Customer may not be able to pay back. Therefore, the purpose is very important. It should be productive. Secondly, purpose is for a legal purpose. There are certain high profitable businesses. High profitable businesses are there in the market, but those are may not legal. So therefore, we cannot invest for that type of customers. Illegal activities. Purpose is okay. Purpose is acceptable, but it is illegal. Then we are not going to accept it. So I don't want to explain for you. So what are the illegal purposes? We are not granting. I give example for you. What case I underwent. This happened when I was in Nigambu. The customer has made a proposal to put up a building for hostel. It is in Katunagi area. You know the Katunagi area. A lot of the girls are working in the free trade zone, as well as out of the free trade zone. There are a number of factories. So the girls are coming from outstations and working. So the very high need for a hostel, residential, the hostel or the boarding houses need is very high in that area. So one of the customers made a proposal to put up a hostel for this girls' hostel. Basically, looking at the proposal and their papers, activities and all, highly acceptable, prudent. Everything is fine. But I went to inspection to find out the location and the environment. This thing. I went to see this this proposed building site and everything. It was a corner of a road, very what do you call not very very populated, very isolated area. He wanted to put up a building in that construction. When I look at the building plan of his plan, I saw that the size of the room is something fishy. There's no toilet facilities, and the size is also small. And activities of that surrounding, right, that particular building, and activities going through a surrounding is not socialized or cannot be accepted. So that area basically very famous for that. So I made inquiry from the other areas, other surrounding people. What I found was this person having another building close by, which is used for a brothel. That means renting out the rooms for the couples to use short term, 1 hour or 2 hours. So basically, on the face of it, proposal is acceptable, but its intention is different. Therefore, this will be lead to a illegal activity. Therefore, I rejected the proposal. So, bank has to very carefully analyze. Okay, the purpose on the face of it is okay. You will go into depth and find out whether it is acceptable to the bank. Third, customers clear about how long it will take repayment. And it's based on this income. How much of income he can generate, either for personal loan, his actual income, for business loan, how much he can generate profit to repay the loan. Based on that, only repayment period has to be worked out. Repayment period has to be worked out on the customer's surplus cash flow. There are two basic factors here where we carefully understand. One side, the banks having delegated authority for managers for a period. Can be 3 years or 5 years. 3 years, sometimes some banks for 3 years, some bank 5 years. Right? That is called delegated authority for period. You should not bob to that period. If the customer having sufficient cash flow, you work out the period depending on the cash. So sometimes you may be able to recover before that delegated authority period. Then you go for it. That's not what you wanted. Healthy quality loan. If the cash flow is not sufficient to pay within that limit, then you have to go for yeah, put a paper to a higher authority and get the approval for that. For the period, high period given for higher management. For example, regional manager having, for example, he can go for 7 years or 10 years. Then depends. Another one is the income, source of income for individual customers, individual borrowers, or we call consumer lending, source of income. Business customers always, we are not looking at customers' personal income, but the income generated from the business. That's a source of income. And these are factors for the borrowing proposition we are looking from the customer's point of view. Then other thing is the bank's responsibility on lending principles is bank is doing a business. I started with that. It should sustain its business operations. So banks always, they are not doing payment business. It's a long-term sustainable business we have to do. The sustainability of the bank is depending on the long-term relationship and long-term income generation and the profitability. Therefore, bank has to look into that aspect. It should sustain business. Therefore, bank should safeguard its funds and make a reasonable profit to sustain lending operations. There are two factors we have to satisfy. Right? The sustainability depends on the two factors. One is should safeguard its funds. Why? Why? It is depositors' funds. Banks responsible for these funds. Banks responsible for these funds. The moment customer asks for the funds, we have to pay back. That's the law I said, Section 86 of Banking Act number 8, Banking Act 1988, 30 of 1988. So we have to protect the customer's funds. In the meantime, we have to make a reasonable profit also. So this is two sides. If you go for high profit and high risk areas against the safeguarding of funds. But if you're going to safeguard the funds, the bank propositions are in the low profit profiles. So you have to have a balance in it. The bank has to ensure as far as possible that the borrower will repay the debt in full with the interest within the scheduled time. Right? The repayment ability of the customer, the cash flow of the customer to pay the loan for installment regularly, you have to calculate. So we have techniques developed for the bankers. What are the interest, what do you call, but the long-term sustainability, the customers ensure the repayment, customers repayment monthly basis, all is as according to cash flow. So one of the fundamentals in lending here is, this is not here in these slides. There are two fundamentals in lending. That has to be kept in mind. Number one, cash flow based lending. First fundamental lending is cash flow based. That means business customers' cash flow will repay the loan. So they are show surplus cash flow should be there. And the need based finance. You identify the customer need and proportion. Prepare a loan product according to the need. These are two fundamental. Need based finance, cash flow based lending. Bank decision on lending, reach lending decision very often based on experience. Certain feeling that loan will be repaid in full. That is institution, right? But the experience should come from the learning and applying the principles of good lending thoroughly. Our bankers' lending has to be based on two factors. One is the customer's repayment ability, I told earlier, need-based finance. Identify the customer need and structure a facility to meet the need. Secondly, cash flow based lending. Recovery should be based on the cash flow. So your lending decision will be based on these two factors. Okay. Right. Let's see who are the types of borrowers, and okay. I'm just going trying to what are things there because I'm doing somebody else's lecture. Okay. Who are the types of borrowers? Categorize. We have individual borrowers, joint borrowers. Specifically, these two are we normally call as lending, a commercial consumption lending. Consumption lending. Then you get sole proprietorships, individual businesses, then partnership businesses. Then private limited liability companies and public limited companies. There are two types of public companies, quoted companies, unquoted companies. Then statutory bodies, government institutions, government, the government directly. Then comes to societies, different types of societies, cooperatives, clubs and societies, NGOs. There are a number of other miscellaneous borrowers. Right. Basically, when you analyze, there are certain factors has to be established. Now, individuals and joint risk, they are like 1 minute, I'll just go through this. It's not there. So I'll take my analysis later here. Now, individuals or jointly asking for facilities for personal uses, or you call consumption purposes. So this is we call consumption lending, lending to consumption. Basically, this type of facilities, banks not expecting to generate any income out of that. So therefore, individual customers, for individual facilities, we discuss basically the established income of the customer. That is a salary, or if it's a self-employed, the regular income we looked into the customer. That's the basic. Other than that, there are certain other legal requirements are there. We'll discuss little on that. Whom can apply for a facility? Right? For example, the legal requirement for individual to whom can request for a facility. There are certain people, certain type of people are not eligible to borrow, right? There are certain people are restricted to borrow. So who are these eligibility criteria? Number one, to borrow from the bank is a before that we are tell you that uh, this is whenever we try to decide to grant a facility for a customer, we have come to a contract between the customer borrower. So this legal background is contractual agreement. So lending also a contract. So it's governed by law of contract. Any lending borrower, basically legal ability has to be established. Now let us see first what is the criteria. What is the minimum age a person can ask for a facility? Yes, it is. What's the minimum age? Somebody switch on the mic and tell me. No one listening to me? No one is listening to me? I can't hear from anybody. Recording එක දාලා ගිහිල්ලාද? Hello? No response. Okay. Individual basically the age category is he should be a major. So to become make a contract, contractual capacity only for the majors. Major mean according to law in Sri Lanka is above 18. Any person above 18 is a major, so his contractual capacity is there, he can get into a contract. So any person above 18 are eligible to apply for a facility. That's a minimum age. The maximum age, there's no legal limitations. Legally, there's no limitation for that. But banks and financial institutions as a practice, we are not granting individual facilities for above 55 seniors. There are different other criteria for entertain such customers. Normally, we go as jointly with somebody else or going as a co-borrower, right? The first criteria should be then age, should be more above 18. Now, upper limit is practice, not the law, right? Above 55, you are not granting is the practice, it's not a law. Secondly, there are invalid persons whom cannot ask for a facility. There are invalid people who cannot entertain. First one is here mentally retarded, mentally incapacity. Any person mentally unsound mind is, according to law, he have no contractual capacity. Therefore, we cannot entertain such people. Right? Mentally unsound people. Thirdly, if a court of law has declined any person has bankrupted, you cannot entertain that person for a facility. Has no contractual capacity. So these are directly incapacity. There are indirect incapacities also there. Sometimes certain laws have been restricted certain people's activities, right? Certain activities may be restricted by some law. Then those people also cannot be entertained for any facility. right? For example, if a person's civic right has been withdrawn by the court of law, civic rights has been withdrawn from the court of law, that person does not have a contractual arrangement. Thank you. In the past, only one instance I can recollect is in 1979, whereas this Jayajavanda government has been filed action against Sirima Bandaranaike, Felix Das Bandaranaike, and H.F. Fauci. These are the ministers and prime minister of the country those days for misappropriation of bank fund, government funds. And their civic right has been withdrawn, but 5 years. After that, we didn't come across any such instances. Recently, one of the person's civic right has been tried to withdraw, but it didn't work out. Who is that? Sarath Fonseca. But it didn't work out. Right. In the future, we expected the last government, and all were talking about corrupted people were taken to courts and finding action. All these things were there in the last regime. We expected some people's civic right may be withdrawn, but nothing has been happened. So those things never will happen in Sri Lanka hereafter. Right? Don't worry about that. So individuals' capacities. In the capacity of borrowing is restricted with certain personal laws. In Sri Lanka, there are two laws, legal system structure. We have common law called Roman Dutch law and English law. So English law is applicable for banking activities, law of contract, business, commercial purposes, import-export trade, insurance. The English law applies. Whereas the common law applies in general as well as for the securities, collaterals, properties are governed by Roman Dutch law or the common law. There are, other than that, in Sri Lanka, we have personal laws. Some personal laws are there. Those personal laws affecting the loan get into contracts. The first one is we're talking about Desavalami law. What is Desavalami law? To whom it applies? Desavalami law applies for the residents of residents of the Jaffna Peninsula. Right? Jaffna Peninsula as a demarcation. Permanent residents or permanent inherited roots of Jaffna inherited roots are there, then those people, this law is applicable. Basically, to understand this personal law applies in Sri Lanka for basically marriages, divorces, and property inheritance. Other activities, which is not very not common. Right. So, Desavalami law applies basically for this this community. What is the impact on our banking activities or the lending? Under Desavalami law, a married woman, right, cannot get into a contract without husband's written consent. Is the law. Married women cannot get into a contract without husband's written consent, according to Desavalami law. So therefore, whenever Tamil lady comes for a facility with us, we have to verify this. Even opening of account, before open account, whether this person, the lady having a contractual capacity. Okay. It's not easy. It's not an easy thing. Today's context is very complex. So you have to verify whether that lady is affected from the Keshavala Milu. If he so, husband's written consent is not obtained, then that transaction is legally null and void. You cannot sue against that borrower in the case of a default. So you have to protect ourselves. This law applies, I told, only for the community in the Jaffna Peninsula, permanent resident of rooted in Jaffna Peninsula, and not for outside that peninsula. Therefore, Eastern Province and Upcountry Tamils are not governed by Tesavala Milo. Okay, right. So, how to protect ourselves? A Tamil lady comes for a facility for her open account with us. We have to verify whether she is coming under that law. If so, we have to get the husband's uh, written consent that he has no objective and he has no objections to she is getting to the contract. Otherwise, what will happen? After granting the facility, if she default the facility, then we come across that she is governed by Tesavala Milu, our loan agreement is not enforceable, legally not valid. To prevent that, what we had to do is whenever any suspicious case comes for opening of account, asking for a facility, we have to get a declaration attested by a JP. A declaration attested by a JP that she is not affected by Tesavala Milu. So it will be in the mandate. So subsequently, she can't say she is affected by Tesavala Milu. This is what, as a practice, we have to do it. I'll give a small question. And this question I asked some time back in one of the papers. A lady comes to Kotahena branch asking for a facility. It's a Milu to do self-employment facility. No, she's coming for a housing loan. She came for a housing loan, right? Jointly with the husband, right? The lady asking for a housing loan jointly with her husband. Now, do we need uh, husband's consent? Do we need husband's consent? It's a joint borrower. Yes. Still, the contract between bank and the customer is different than in their marriage. We have these two are for the bank two individuals. Although they are married, they are two individuals. Therefore, legal applies for both separately. Therefore, we have to obtain consent of the husband. Okay, this is practical side. Next law comes with the Sharia law, Muslim law. There again, certain big issues are going through in Sri Lanka now regarding this law. There are certain practices in this law are against the common law of the country. That's a problem in the country at the moment. They are trying to create issues on that. Let's see what are these issues. In the normal circumstances, under the normal law, if a person marries below 18, what will happen? If a person marries below 18, under the common law, what will happen? That contract is null and void cannot be implemented. Why? Sir, minor. You can't minor has no contractual capacity. So it's a other thing. It's illegal. Uh, so magistrate can imprison the both parties. But if a Muslim marries below 18, according to the Sharia law, he is becoming a major. If a Muslim marries, he is becoming a major under the Sharia law. So, according to Sharia law, what is the age of majority? According to Sharia law, what is the age of majority? Has no age of majority in Sharia law. It is a purity. A male or a female becoming a major on purity. So he is treated as a major according to law. So age is not matter or material. That's a principle. Right? Age is not a matter under Sharia law. Okay? So there are another issue is multi-marriages. In normal circumstances, if you marry more than two women, what will happen? That marriage is illegal. So according to the law, it's a criminal offense, can be imprisoned. But in Sharia law, it is not there. This is the controversial issues today's community we are having. Certain people say this has to be uh, removed, one country, one law. So let's see what will happen in the future. But the present context is the position, right? Sharia law. The third one comes to Buddhist, what do you call, Candial law. The Candial law, of course, there's no much of problem we are having other than their marriages and property inheritors. Then next this comes to another one more law in Sri Lanka, which is having a big issues. I mean, lot of issues with the bankers. That is a Buddhist priest coming for a facility or asking for a facility. Can you entertain that priest to give a loan? In other words, can you give a loan to the Buddhist priest? Hmm? There's no legal restrictions for that. Normally, there was a case, similar case earlier, that is Dhammarakkhita Thera versus RMV, Commission of Motor Vehicles. The Dhammarakkhita Thera asked for a driving license. RMV, that is Register of Motor Vehicle, rejected that application and he filed action. Dhammarakkhita Thera filed action in the RMV, Register of Motor Vehicles, and the court decided that it is a fundamental right according to the Constitution. So, based on that judgment, you may find that it is not, you can't say no to us when it comes for a loan facility. But we have to be very careful. In relation to Buddhist priests, what is the law applies to them in Sri Lanka is Buddhist temporary ordinance. According to Buddhist temporary ordinance, the properties of a Buddhist priest have two types. One is personal property, other one is temple property. Pudgalika Depala, Sangika Depala. Pudgalika Depala means private properties. There are two types. One is earned properties, Upayaga Depala. Secondly, inherited properties, Paraveni Depala. Parampara Depala, Paraveni Depala. Second one is personal. Whoever, there are teachers, there are doctors and practitioners, earn some. So when a priest having earnings, so it is becoming his personal income. So whenever you entertain for a facility, you can entertain a facility for such Buddhist priest based on the personal income. Based on the personal income, entertain, no problem. But you cannot touch any income from the temple. Temple properties income cannot be used for repayment of a facility. That has to be very careful. In other words, who is the man who are authorized to manage the temple properties? According to temple, Buddhist temple is ordinance. Who are authorized to manage the temple properties? Is it Commissioner of Buddhist Affairs, or the commissaries, or the head priest of the temple, or the Nayaka Hamuduru, or Nikaya chief priest, if incumbent, or the Dayaka Sabha? Who's the authority to manage the temple properties? No one. It is the public trustee. According to Act, the public trustee is the trustee of the all Buddhist temples and shrines in the country. It has no person have authority for do anything for the property without the permission of the approval of the public trustee. So this is the background, legal background. So supposing a Buddhist priest passed away, dies, apavat wunot, මොකද තත්ත්වය? When the Buddhist priest dies, all his properties becoming Sanghiya, except for Paraveni Depala. Even personal properties goes to the temple, Paraveni Depala goes to their inheritance. So the problem is, after granting a facility for a priest dies, how to recover? Question is that. Other than we have a problem. Still that question is remaining unanswered. So therefore, whoever going to lend, specifically state banks, private banks, of course, we are not come across, we are not coming for asking for any facilities. It is the public banks. So you can entertain a priest with the personal income of their personal income, not on the temple income. You can retain that. Right. So those are the legal background of the both types of borrowers. So sole proprietorship is nothing different than individual, same. So the documents you have to get only the registration, business registration, and you can enter in as individual customer. When it comes to partnerships have a certain laws according to the Partnership Ordinance 1924. Certain legal background is there. Now, when it comes to partnership, who are authorized to get a loan from the bank? In other words, for partnership requesting for a facility from the bank, right? Who are authorized to sign for the documents? For example, you take there are 5 partners in the partnership. Three of them are operating the current account. Any one of 3 can operate the current account. Right? In that background, if asking for a facility, who should eligible to sign the document? Yeah, it should be all 5. Why? According to the partnership ordinance, each and every partner is individual and severally liable for all the transactions. Therefore, all parties has to be signed. Okay, so these things we have to know. Even for opening of account, what is the legal background of individuals? Then comes to the partnership, the limited companies. There are three types of limited liability companies in the country, according to the 2017 amendment, 2007 amendment. There are three types: the private limited companies, public limited companies, and companies uh, companies limited by guarantee. Companies limited by guarantee. Third one is not here. You can just note down. Private limited company, public limited company. The third one is guaranteed by companies guaranteed uh, by guarantee. Companies by guarantees. Limited by guarantee. Companies limited by guarantee. Right. Private limited companies are now, according to new regulations, one person can start up this company, one person, and maximum 20, can go up to 20. Private, the private limited companies are, according to the law, the recent law is Samatpala Javardhana versus International Bank case, which I decided, even though it's a private limited company, it is nothing other than like a sole proprietorship or a partnership. Only the liabilities are limited. So activities are something like a individual or a sole proprietorship or a partnership. This is the latest legal definition. Therefore, the private limited liability companies can borrow also facilities. So basically, we have to get the documents according to the need, the requirement. Basically, they are normally when we open an account, we take the memorandum and articles of association, then list of directors certified from the register of companies. Then there resolution passed by the board of directors. Right? These are common things. For you for a loan, you have to get that documents. Public limited company are where the shares are issued publicly. Therefore, we have a more spread than the private company. There are two types of private public companies which are quoted in the security exchange, and there are unquoted in security exchange. The quoted companies are which have to sell their shares through the security exchange. Unquoted companies, they can do privately, they can disperse. Right? So more or less same, activities are same, only for one document needed for public company for start their business. Other than that, all others are okay. Then comes to limited by guarantees. Those are normally non-business companies which are not involved in the profit-making business. Right? They are not making any profit, but their activities are social service, social works, or like banks. They are non-banks organization. Societies sometimes can be come into the public limited liability company to limit their liabilities into the guarantee level. Right. Then comes the statutory bodies, state organizations. Normally, banks are not authorized to grant any facility to the government institutions without the approval or the guideline approval or direction from the DST. So the government institutions are governed by Deputy Secretary of the Treasury, DST. So government organization is supposed to borrow from the bank without DST's approval. Okay. And cooperative societies are not coming under our purview because it is governed by separate act. So normally cooperative societies cannot open account uh, other than People's Bank. So all the transactions should go through People's Bank. Right? When it comes to NGOs, clubs and societies, they have no borrowing powers because they can borrow only against cash. Other than that, we are not granting any facility for clubs and societies. Okay. Okay. Before I will go this details, but basic it's not here. It's my classification. So basically, lending products. Okay. Basically, the lending products we are categorized into three groups. Lending products are categorized into three groups. It is not in the slides, my explanation. So you can take down this. There are three types of, right. We can classify lending products into three groups. Number one, asset-based products, right? Asset-based products. That means we are granting facilities backed by assets, backed by assets, right? So where asset-based products are coming, it is uh, which banking. The facilities are appearing in our balance sheet as an asset. Asset-based product is appearing in the balance sheet as asset. What are these? There are two types of assets. One is loans, other one is overdrafts. Loans and overdrafts are coming under asset-based products, right? Second one is fee-based products, right? Uh, Sorry, second one is fund-based products, asset-based products. Second one is fee-based, fund-based products. Where we are giving funds to the customer. Funds are going out of the bank. For fund-based products, loans and overdrafts. Fund-based products, the funds are moving out. Second one is, sorry, I just mistaken that one. Right? First one is fund-based products. Right? I give my memory. First one is fund-based products. Fund-based products are where the funds are moving out from the bank. That is loans and overdrafts. Second category is asset-based products, where we are not giving funds, but we are giving an asset to the customer. Asset-based product mean we are not giving funds to the customer, but we are giving an asset to the customer. There are two products in the market: lease finance and hire purchase finance. We are giving asset, not a loan. These two products. Third one is fee-based product. Fee-based product. Fee-based products are we are not giving any cash. We are not giving any asset, but we are accepting liability of third party on behalf of a customer. The banks accepting liability of a third party on behalf of a customer. That's called fee-based product for a fee. What are the products? Bank guarantees, bank guarantees, uh, letters of guarantees, and other types of import-export trade. We are having guarantees. So all the bank guarantees are coming under that category. So there are three classification. The basic classification criteria of lending is fund base, asset base, fee base. Okay, right. Now let's go lending to different sectors according to central bank guidelines. What are sector of for lending? This lending sector classification of advances according to central bank guidelines. There are commercial activities, financial, agriculture, industrial, tourism, housing, consumption, services, and others. There are 9 criteria the central bank has classified. Now, the central bank classified these facilities based on the economic activities. Based on the economic activities which is directly affecting the economy. Right? Commercial activities includes wholesale trade, retail trade, import business, export business, and commercial constructions. So lending to this criteria is coming under commercial. Why the central bank classify in this manner? When they are prepared their annual report as well as quarterly report, the economic activities, they have to make a comment on the economic activities. What is the growth? What is the movement of these economic activities? So the bank lending to these segments has to be given to the central bank for their preparation of the activities of this what do you call uh, economic sectors. Right? For example, if the government want to improve certain sector, which government is thinking a prime sector of the government, taking the case of tourism. So tourism sector taken separately, and government can give priority for certain criteria like interest rate reduction, loan recovery period given extended, rebate housing, what you call refinance loans. Likewise, they can differently and given. Then they want to increase the reduced consumption. The more consumption is increase in the cash flow of the country, and I mentioned earlier, and therefore it is affecting the inflation. To reduce inflation, government may put controls over consumption activities. So, to what segment is breakdown they need it. For that purpose only, they are asking this information on the banks. So all the banks, they have to prepare their statistics based on this classification, right? So that's what is classification very important. So commercial activities are any activity carried out at commercial level. Compare with the substance level, self-employment, micro-enterprise, all are coming under this category. So this under commercial, wholesale trade, retail trade, SME sector, import, export, commercial, construction, all are coming under commercial sector. So whatever facilities gone to this sector is classified under this category. So when the banks work out their portfolio, right? When the bank work out their portfolio, they work out their portfolio based on this classification. Certain percentage for commercial activities. Financial activities, this is a percentage. Agricultural, of course, this much. Now, for example, till up to 2009, the entire banking sector in Sri Lanka granted facilities to agriculture sector was less than 3%. The agriculture sector, the lending for the banking sector was less than 3%. So this is the priority sector of the country. The priority sector of the country. So government decided, okay, in 2009, that from 2010, all the banks has to lend minimum of 10% of their portfolio to the agriculture sector. So that policy decision has been made because that's the priority sector of the country. So this information collect central bank to monitor the activities based on the economical activities. Right. Let's see what is the commercial activity. Compare substance level of self-employment and micro enterprises. Purpose advance loans involved are commencing new venture or improving extending new venture. Commercial activities are moving towards different areas. It's called commercial exports and imports, wholesale and retail trade, commercial constructions, other commercial activities. right? So these commercial business are normally classified into three groups. That is wholesale trade, retail trade, basically these two. And the third one is small sector or tiny sector we call SMEs, right? Then again, it comes to there's another component here within this commercial wholesale retail is the development sector. That is commercial manufacturing sector. It's a subsect of this, right? So banks has to classify to lend into that sector separately, right? According to banks, normally if you take banks, their own classifications, it goes uh, different activities. Main ventures are financing trade, housing loans, agriculture sector, industry sector, tourism sector, small and medium enterprises, micro enterprises, and consumption loans. Main ventures. Let us little go detail one by one how the banks are lend into this segment, what are the features and what are the requirements on the business. Okay, so before I start that, I think you all are tired. Nobody's replying me. So I feel you all are tired. So let's have a small break. Okay. Recording? Okay, shall we start? Okay. So bank, when we what do you call portfolio management, specifically banks when do we arrange for a portfolio, different, how much in which sector. So bank has work out in a little different from the central bank classification. Now we in the bank we go for trade, housing, agriculture, industry sector, tourism sector, SME sector, then micro enterprises, small sector, tiny sector, and consumption. So bank has developed what percentage you can accommodate for this particular this segment. What the maximum ceiling limit? How much you can go? I told you about agriculture sector last. The industry was about less than 3%. The government decided in 2010 minimum of 10%. Now we have to do minimum of 10%. Now, if this sector, tourism and industry sector, which the government has given a lot of support, and like we are these three sectors. So housing and trade are given less priorities in the country today's. Yes. So depending on the so each and every bank has their own portfolio, right? How much what section they can go for a particular segment and what the what do you call tolerable level of portfolio. Now, for example, if you say consumption, now under the consumption, even owning business comes under consumption loans. In 2003, you know that what happened? 2000, sorry, the recently 2013, gold prices were collapsed. Gold prices were collapsed. So what happened? Most of the banks and financial institutions who have been lending on uh, this product owning at severe losses. Severe losses because the borrowers did not come to redeem the gold because it is cheaper to buy from the market than redeem the existing one. So banks are facing severe losses. So one of the banks, commercial banks, have been lent 42% of their total portfolio for this purpose. So what will happen? Virtually that has bank has to shut down their doors. But central bank came forward, suppose given an 800 million loan to come out from the situation. Otherwise, Entire industry would have been swept. So this is the problem. So therefore, we cannot lend as we want. Okay, in the trade segment, for example, commercial sector lending, the most popular product is temporary order facilities. It's a high risk product. So therefore, there should be certain limit of controls has to be established, for which this purpose has been established by the banks. Okay. So what is trade? Just little go detail. What are the products including the trade? Trade includes of wholesale trade and retail trade. In other words, uh, banks has segmented their customer base, trade customers segmented into two groups. Basically, wholesale customers, retail customers. Normally, the wholesale, medium, and retail customer classification. So their needs are different. When it comes to wholesale trade, the corporate clientele are coming under that category. Corporate clientele means whoever need large facilities, large type of business. One proposal itself goes to certain large millions of rupees compared to retail. Sometimes 100 retail customers equal to one wholesale customer sometimes. So therefore, banks have a lot of dependence in these segments, right? Wholesale and retail market classification. Then comes to import-export trade. Import trade, export trade. Basically, Sri Lanka depends mostly on imports. Our exports are very limited, very minimal. Therefore, the importance of this trade is financing for this trade is also depending on the demand. After the COVID-19 case, you would have seen the government has been banned a number of imports, luxury items, non-essential items likewise. Lot of items have been suspended importing, but try to export much. Now there's a big problem with this export and import market. If you see that for export we have the market is we have to do certain items, import items needed because most of our exports are re-export, interport business. So that is affected now, right? Also, some our manufacturing organization they need certain product to be imports, raw material. So when the import ban implemented under that, our export also come to a standstill. So in the bankers, now we have to be very careful about the lending. So what are the products available for the import customers as well as export customers? What are the products for import customers? What are the products for export customers? What are the products for wholesale business? What are all the trade, wholesale and retail trade? What are the products? So let us I'll give little details later. What are the products we are being offered into these segments in the trade segment? Now, if you got trade segment, wholesale and retail, basically we have uh, lending products, loans and overdrafts. Right, that's a basic product we are offering them, based depending on the criteria. So other things are coming below. For trade, we are financing a need for trade. That is loans and overdrafts. When it comes to imports, we have different number of types of products. Right? In import facilities, there are basically three import facilities are discussing direct facilities. That is TR facilities, trust receipt facilities, then hypothecation facilities, pledge facilities. These are loans for import trade. Then again, there are indirect facilities, bank guarantees for import trade are letter of credit, Then shipping guarantees, duty guarantees, right? And so import customers, loan products. Export customers, pre shipment credit and post shipment credit. Before the shipment, customers are given working capital finance, and then post shipment credits are bill discounting facilities. Right? Then trade also includes distribution, dealership, and agencies. That means certain companies are doing distribution for certain manufacturers. For example, we see Dali Butler, Reckitt and Coleman, then some like these companies, John Keel sometimes, they do the distribution work for other dealership and agencies for other products, other companies, small businesses, small type of manufacturers, right? So they do the distribution work. Other services, other trades, technology, because IT, professional and communication. Those are called services under trade. So it's a business, professional business. That means professional advisors, professional uh, consultation, right? Professional services, technical services, all are coming under services. In the communications, specifically needed for telecommunication, fax and other facilities, IT facilities, all are coming under service category for trade. Then public transport and commercial transport are also coming under trade segment. So if you look at private buses, public bus service, train service, in the small type of three-wheelers and cab services, all are coming under trade, transport trade. Then comes to contracts. Contracts means uh, either supply contract or construction contract. There are certain companies are construction companies are there. They are doing contracting. Then among these items, there are pledge facilities. Pledge facilities are normally deal in the import trade and also pledge loans for agricultural produce sector. Agriculture sector, we use the pledge facilities. Sector-wise, if you take, right? So wholesale trade, retail trade, what are the products we have available? The real estate, land and building, buying and selling business. That also comes the trade. So financing this in different segment is coming under trade. Okay. Then comes to housing. Housing products. Basically, housing products we are classifying the commercial construction comes under trade. Commercial constructions are coming under trade, but consumption purpose we are doing housing is coming under housing category. Under this, what are the finance are given for purchasing of residential property? Right? To banks loans are given to purchase. These are long-term finance. Nearly about 10 years, 10 to 15 years, loans are given for housing, residential property, buying of residential property. That's housing loans. Secondly, purchasing land and construction house. Right? To purchase a land, that is purchasing a residential property means already built property. It can be land or it can be a condominium property. Right? Purchasing condominium properties are apartments. Then purchasing a land and construction house. Right? But to purchase land, normally 75% land value is given by the bank, and construction cost, 90% of construction cost given by the bank maximum. Within that limit, if the customer capacity, the loan is considered normally, in average. Then construction of house in own land. Now, a customer having a his own land, to put up a house in that land, loans are given That also comes to under housing. Finally, renovations and extensions. Now, we have to be very careful about this renovation. What is renovation or extension? Renovation is something, value addition for the existing property. House with the renovation is do something activity where the value will go up. That's called renovation. So you have to understand the difference between renovation and the repair. Repairs are not coming on housing loans. It comes under consumption loan, right? Renovation comes under renovation comes under value addition. For example, new pantry cupboards, tiling, extension, getting extension of the house, modification. That is called renovation, which will increase the value of the asset. It's called building facilities. So all these facilities are normally long-term facilities backed by a housing mortgage. Then comes to agriculture sector. Agriculture sector, loans are given for different segment. This is not only just a small area. If you look at central bank guideline, what is agriculture mean? Agriculture products as well as agriculture. Beyond this, there are certain other areas also coming under agriculture. Very limited area only is Dr. Logan included. Paddy cultivation, vegetable cultivation, fruit crops, perennial crops, plantation, livestock and poultry, fisheries and aquaculture. Now, this is basic. Then beyond that, value addition is processing. Agricultural product processing is also comes under agriculture. For example, if you take fishery sector, catching fish is the common agriculture sector. Similarly, manufacture of boats, manufacture of nets, right? Manufacture of cold rooms, investing in transporting of freezer trucks, all are coming under agriculture sector. So this sector is not limited to the basic, but value addition also comes under this sector. Normally in Sri Lanka, paddy cultivation, vegetable cultivation, perennial crops, something, all are fruit crops, are lent at the low interest rates with the government support. Central bank is giving refinance loans in the lower cost to be given to these borrowers to do. Otherwise, cost of production will go very high. They cannot market this. Therefore, this is subsidized by the government giving refinance loan for paddy cultivation, vegetable cultivation, fruit crops, and perennial crops. The most common central bank scheme for this item is NCRCS. NCRCS. What do you mean by NCRCS? New Comprehensive Rural Credit Scheme. Under New Comprehensive Rural Credit Scheme, interest subsidies given to the banks by the central bank through the by the central bank for giving loans to the this sector, right? Plantation. This is minor crops, small plots, half acre to 5 acres maximum. Then comes large plantations, tea, rubber, coconut, cinnamon, plantation sector, large sector. Most of this plantation sector is export-oriented products. Tea, rubber, coconut, cinnamon, all these things are export market oriented. Therefore, plantation crops have a big, what do you call, large, it comes under large corporate business. Then comes the livestock and poultry, cattle farming, pig farming, goat farming, lamb farming, all, and poultry. All comes under livestock. So agriculture sector, under agriculture sector. Then fishing and aquaculture. Aquaculture means the fish, ornamental fish, called aquaculture, ornamental fish. So these are agriculture sector where government's priority sector. So banks are lending mostly to this sector also in different categories. Different categories, uh, selected category, or the total loan portfolio should be more than 10% according to the central bank regulation as at after 2010. Then industry sector we got three size, small or SME sector, then medium sector, medium in SME sector, then the large industries or macro industries, called macro industries, micro industries, macro industries. Now the industrial sector is time to time coming up, sometimes going down. Because in Sri Lanka, the manufacturing sector, manufacturing goods and services, processing of agricultural processed goods, milling, are acquisition of new technology, training of staff, product quality improvement, marketing of products are some of the industrial sector where we are going to live. Now, if you look at industry sector, basically this is linked with the government policies. Basically, industry sector is linked with the government sector. Let us go back a little to our political arena, political system. Can you remember when Mahinda Rajapaksa came into power 2010 as the prime president? His manifesto, his manifesto was Mahinda Chintala. Can you remember? So, what is the priority sector in Mahinda Chintala? In to develop the country, economic development of the country, what was the priority sector? Of course, infrastructure development that didn't come to the banking sector. Infrastructure development will take place, but the roads are expanded. Even now, we are doing that same thing. Roads are developing. Those are with the foreign aids, not direct with the local banks' investment. But, right, mind the Chintana is in 2015, Ranil Wickremesinghe, in his manifesto, what he said in his manifesto, create 1 million jobs. Create 1 million jobs. So to create 1 million jobs, what sector has to be developed? The industrial sector. The industrial sector has to be developed. Okay, so if you can go through the central bank reports regarding during this 5-year period, period, to what extent industries have developed? How many new industries has come? We have not seen publicly any industry has been come up. So we in social media, everything we hacked that government. But if you look at the central bank report, there are a certain amount of growth in the industrial sector that didn't come to light to the picture or the big issue. Most of this sector was in the private sector, not the government sector. Government was not interfered in the manufacturing process. There's no government interfered or government involved. Industries has not been established by that government. All are given to private sector. Now, for example, Brandix had started their factory, shifted their factory to Batikolo. There are 1,500 employees who are given there. Right? Now, the last week news was there. The Horana Tire Factory, one of the last garments products, is going to start their manufacturing. The largest tire factory. Likewise, it has certain amount of activities have been taken place in the industry. So industrial development was the focus. Now, what is the Saubhagya Act? That again, this SMEs, not the large-scale industries, small-scale industries, which was the last government also during the latter part of their period, came with Enterprise Sri Lanka to develop the private sector in manufacturing, processing, agricultural processing, value addition and export market came. Now this thing will be continued by we'll hope, although the different policies may be changed, but the principle is same. At the Saubhagya Act also have the same thing. So the manufacturing sector is what you are looking for, creating jobs. Creating jobs. The problem in Sri Lanka is, right, although the governments try to create jobs in the private sector, most of the job seekers, school leavers, as well as the university students, are more interested in the government jobs, not in this but the private sector. So there's a lacking. So they always see unemployment is growing because they are not geared to take over this sector of the country, which is needed for the economic development. So as bankers, we have to look into this aspect. But my personal feeling, go out of the way. The last session, not some of the sessions I have presented, there's a plenty of market available for us to lend. We are trying to limit it with a certain few products or few lending products among our. We are not expanding our lending product market. This has to be done. Marketing part has to be done. Create new businesses and try to help them by loans. So it comes in this category. So we have a market. Bankers have a market to lend. Although the central bank report says last year, 2019 report says, compared to 2018, the loan growth has been declined by 8.5%. Minus. Compared to 2018, that is 2017, 2018, loan growth was 13.5%. Loan growth in the country was, central bank report says, 13.5%. It has come down to 8% negative because there's no demand in 2018, end of 2018. And 2019 is worse because due to COVID-19 epidemic, the entire business sector was come to standstill for more than 9 months. So no new development projects were taken place. No businesses were improving. So therefore, lending was curtailed. We are in that position now. Well, this industrial sector is the thriving sector for the country. Two things. One is manufacturing, giving new technology, and training of staff. This is they are needed for improvement of this sector. So mostly the government vocational training institutes have vocational VOQ certificates are given for different technical training for the young entrepreneurs. So bank has to identify those young entrepreneurs, give their credit facilities, put them in manufacturing process, and do certain marketing, carefully marketing their products. It will help us expand our loan portfolio as well as achieving the target of the government to increase our standard of living. So this bank has to play big role on this sector. So we have to understand that for basically this sector. Okay, in SME sector, this is the most important part. micro enterprises. 75% of the businesses in Sri Lanka are coming under this SME sector. 75%. Whereas the large number of people are involved in SMEs business. Therefore, this is the sector a little while ago I just discussed about. Bank has to focus on it, micro enterprises and the SMEs, small and medium. So micro enterprises are large trade organizations, large manufacturing organizations, right? Large, it's needed with large capitals, large investment. But we need SMEs, small and medium enterprises, manufacturers, to to develop our country and economy. So the governments, last government, previous government, that's Mahinda Rajapaksa government, then the Yahapala government, clearly identified this sector and brought a number of issues, number of what you call measures to assist this sector. Right? Mahinda Rajapaksa government, then the Yahapala government also in 2016 budget. They look at the 2016 budget. Major portion was allocated for this SME sector. And if you look at 2018 budget for the banking sector, what are the guidelines given under in the budget, 2018 budget, guidelines of the banking sector? There are priority sectors of lending. Identify the priority sector of lending, all the banks. According to the budget proposals in 2000, which has been circulated by the central bank subsequently as the guidelines of all the banks. Number one, SME sector, tourism sector. 10% of the portfolio to be given each and every bank to the SME sector and to the tourism sector. On the portfolio, 10% has to be allocated for this priority sector, 10%. 10% for agriculture sector, which is for 2011 it was coming, 10% for agriculture sector. 5% of the portfolio should be allocated women and youth. Tarunyata Hetak. This was there in 2018 Mangala Samara budget. Right? So the 25% of from the total deposits to be invested for the portfolio, total portfolio of the banks, 25% for these three areas, 10% for tourism and SMEs, 10% for agriculture, 5% for women and youth. Okay, further 2018 budget allocated, given the banks certain priorities. What are those priorities? Number one, all the branches has to invest 15% of their deposits in the GAMI, in their own area. On the total deposit, 15% to be given to that village area for their projects. So the center, these guidelines go on this side. The other side, bought the proposal, that is Enterprise Sri Lanka. 14 sectors has been given to the banks to identify the eligible youths and give the facilities, loans, which have been, some of them are backed by ADB credit guarantee, Asian Development Bank credit guarantee, where venture capital finance is introduced by the ADB. Same there. So what is today, what we have to think is see the policy of the government. Still, the Saubhagya Dakma covers that area, so you can go ahead. Other one is professional services. Professional services, technical and technological services. Accountants, engineers, quality controllers, likewise the technical side development of the people. So who are enterprises taking a part in this, be given opportunity to assist them on the professional services. Right. What are other things? When it comes to tourism. Tourism sector included lending to construction of hotels, maintenance and refurbishing of hotels, financing for touring and travel agents, and tourism transport are the sectors have been identified to lend under tourism. Now, construction of hotel, we know everybody. There are different, according to the tourist board, constructions of tourist hotels are encouraged. Before the corona epidemic last year, 2019, we were expected 4.2 million tourists to be arrived. Unfortunately, Easter Sunday attack completely that has been destroyed. But still, for all, we have identified, the government have identified that tourist arrivals wants to establish this corona problem in Sri Lanka may be going up to 3 million per year. So the hotel needs are increasing. Need for hotel rooms are increasing. So when you're taking into account the number of hotel rooms available in Colombo are very limited. Star class hotels, very limited. You will see number of hotels are coming up, large hotels are coming up. That is one golf is Shangri-La beside. Then you find that in golf is there are two more residency flats are coming up. In the fourth area, there's hotels are coming up, as well as other areas also hotels are developing. That is, but that trade also, concession interest rates are given by central bank, free finance to the banks who lend. So bank has to identify the projects and roll it out. Then most of the hotels has needed refurbishing, because refurbishing means the hotels has to upkeep to attract the tourists. So normally every 5 years, all the hotels they do refurbishing. They change in their pattern, they are changing their utensils, they change their room arrangements, beds, right? All these things they are rearranging. That's called refurbishing. They need a large cost. So hotels are investing large amount of money to keep up their hotels. Then come to tours and travel agents. There are certain indirect parties are involved in the tourism trade. Travel agents, those are who are arranging for internal traveling as well as external traveling. Operating vehicles, okay. Uh, Transportation, new buses and all, everything, transport, tours and transport has to be developed. So loan facilities should be given to enhance this one. So this is another area in tourism we need to have in our. Okay. So banks have another area of lending is consumption lending. This is called consumption or personal loans normally. Whatever facility is given for personal purposes. Vehicle loans, household purchasing of household goods, educational purposes. Then other personal expense reimbursement of personal expenses. Likewise, banks are entertaining facilities for consumption purposes of the customers, clients. This consumption purpose of vehicle for personal use, it can be mortgage, vehicle mortgages mostly, or leasing, vehicle leasing, or hire purchase finance. So this is one of the popular product in the market. Banks and finance companies giving vehicle loans facilities to customers. According to the central bank report, in Sri Lanka, we have number of leasing companies and financial institutions which are granting these facilities to the customer. Due to this availability of funds, vehicle imports have been increased in the country. Now it has come to a situation where the country cannot afford. The roads are not sufficient. Expanded roads are not sufficient. Therefore, the increase of vehicles have become a big problem. Due to shortfall of what do you call foreign exchange, this government on the initial stage itself, after the vehicle import ban kara. All the vehicles imports are banned for short of 6 months. Now it has been extended for last 6 months. So it has extended for 6 months. According to the vehicle importers organization, they are saying only 3,000 vehicles are available, brand new, the unregistered vehicles are available in the market today. There are thousands of importers who is dealing in the business. We have to see what in the future the government directions. There's a certain limitations, direct and indirect. So lending, the banks for lending, leasing finance, mortgage finance, house high purchase finance for purchase of vehicles. Now to reduce the vehicle put into the road, central bank put a what do you call loan to value uh, limitations. Loan to value limitations. Right? So therefore now you cannot you have to lend. You cannot lend 100% of the value of the vehicle, a certain percentage only. 25% of the share. Only 25% of the value can be given as a loan for three-wheelers, 50% for the vehicles, and commercial vehicles, 75%. Commercial vehicles have purpose. So it will be time to time. Once a week, it is changing by central bank. So we cannot stick what is the current plan. We have to go through and see central bank guideline. Loan to value, LTV value. Then buying of household goods. Now this is another product which has been through head banks were given for the customers. Purchase of specifically durable goods, electronic goods, or uh, uh, durable household goods, electronic and electric goods specifically. Banks for loans are given. But the operation was the scheme was not successful those due to certain problems. Let's see what are these problems. There was a Singagiri, single Sri Lanka, then the number of manufacturing Abans, uh, Soft Logic. All these people are giving uh, consumer durables, on credit terms. Earlier, the banks were involved. What they did was they arranged for a bank loan and they select the customers. They arrange everything in a place. They sold the goods to the customers and got the customers involved in for a what you call loan agreement, and the loan agreement given to the bank given money to the vendors, companies who have got the money. Now, operation of these loans are carried out by the banks. So banks have operated directly recovery from the customers. So most of these customers are salary wage earners. These companies go to a company, get their employees, assigning of their salary to the bank, the loans were given. Assignment of the loan, salary, loans were given. This was the failure was this system was most of the borrowers who have bought these consumer durables default on the facilities. How? They suspended sending the money to the bank. So bank cannot recover. Or they have shifted their jobs. They took the job from one company A, then they shifted after taking the loan, before settling the loan, A shifted to B, company B. So company B is not liable to send the salary to the bank. So that's second. Thirdly, the staff have been transferred out, right? So we don't. Sometimes you may not find their whereabouts. So this system was swapped. For example, I can give. Banks have arranged facility with the one of the hotels in Paikal. Their staff. So the staff has brought electronic goods like TVs, two-in-one radios, three-in-one sets, electrical goods like ovens, washing machines, right? The company has the letter of undertaking from the company was taken to remit the salaries to the bank. 2-3 months, everything was okay. Then thereafter, bank didn't get money. Money is not remitted to the bank. Then bank sue the customers. They are not paying the money, they will be taken to the courts because pointless seizing their goods. It is not value, economy not value worth at all. So, number of cases came to the bank saying that the employer had deducted from his salary the loan installment to be paid to the bank, and which were not remitted to the bank. The hotel management has been taken the money, deducting from the employees and not remitted to the bank. And how to sue the company, the hotel? Only undertake it. It's not a legal document. So likewise, number of this type of things took place. Therefore, this was not successful. Banks have to give up. Now, these companies, companies has developed other methodology that is going through a credit card. Now, what they do, they assign a credit card, right? Give the facility, give the electronic goods or credit, and assign the credit card. And monthly, the company will debit to the credit card account and try to collect the money. So now that is going on little successfully because there's a hold on the credit card, right? So that's the second consumption. Where one of the popular products going through now is going through not the normal credit scheme. It is going through the credit cards. It's another product. Credit cards is another lending product. Then comes the consumption. Other one is the educational purposes, loans for educational purposes. Now, this is another very popular product in the market today. Education means higher education. Higher education loan scheme. Earlier, what we found when the government, not the government, actually the government intake to the universities were limited, there are a number of students who are getting through the A levels on the private schools as well as the government schools. Right? They have no access to the university. University is Sri Lanka. So they wanted to follow courses in foreign countries, specifically courses in foreign countries. But their financials, they need very large amount to be invested in the education, 4 years or 5 years, depending on the course. They have to spend large amount. Where their parents' income was not sufficient, but they have properties. So bank came forward, arranged a program, right? Loan product called educational loan scheme. What are the features of this education loan scheme? Let's see. Number one, loan is given to the student. Student is the principal borrower, right? And the loan is given for the course period. And in addition to course period, time is given for recovery, about 3 years or 4 years after the completion of the education. Therefore, there's a grace period up to the completion of the course, that is 3 years or 4 years. Then responsibility to repayment of the loan starts after the students get the job, after the education, get the job, and he has to start pay repayment. From there on, 3 years or 4 years are given for recovery. Maximum period is 10 years. Maximum amount depending on the course, and the bank has decided to be 10 million, no, at maximum. Some banks are going up to 10 million. Right, selection of these employees, the students. Student has to register in a recognized university or a education institution, Cbbo or whatever education institution, or a reputed university. That university has to be established, should be registered with our UDC, University Grant Commission. And university grant should be accepted universities only we are selecting. The loan amount will be 3 components. One is course fee, the loan given for the course fee. Second is for the examinations, cost of examination. Third is for incidental expenses. That means students' day-to-day expenses. The 3 components. Maximum will be decided upon that. So we have first get from the university or the education institution, what is the cost structure, right? How the cost structure, how to pay the cost, what is the method of disbursement of funds. So we bank approve a loan facility for the maximum amount and will be released on semester by semester need base. For registration, and first course fee will be paid direct to the debiting the customer loan account, directly paid to the education institution. We say university or the university. For example, we say University of London, so directly is paid to the University of London. That is registration fee and the course fee for the first semester. In the first semester, there will be an examination. Okay, so examination fee will be again remitted to the education institution, say University of London. Then customer is now living in that country following this course. His expenses, his living expenses will be given as a loan to his personal account in that country. Funds are deposited in his account for his personal expenses for their day-to-day living. Right? Now, therefore, the interest has to be paid by the parent. I come to that. So, interest has to be serviced depending on the amount borrowed, not for the entire amount. Semester by semester, loan is debited For that amount only interest has to be paid. For the initial stage, he had to pay a very small amount of interest. End of the course, he had to pay for the education, what you call examination. Once you get through the examination, he had got 3 months time, another grace period, to find a job and start employment. After that only, you are given more repayment, depending on the job. There are 3 years to 5 years. So maximum period may not exceed more than 10 years. Maximum amount may not exceed more than 10 million. Now, what is a collateral? This loan is given to the student. The parents' properties has to be mortgaged. Parents' properties has to be mortgaged for the facility. And the parents will be joining as co-borrowers. Not a joint account, it's a co-borrower. They are becoming co-borrowers. So in the case of default by the students, the parent has to pay the loan. Servicing of interest is falling on the shoulders of the parents. So parent has to maintain only the interest payment. So they are relieve the burden of the education expenses. Okay, so this is how the education loan system is adopted and going ahead. It's a very successful product at the moment. So almost all the banks are having this education loan product very successfully going on. So basically, we have to understand the basis, how the consumption loan this loan has been applied. So in this consumption loan, there's another products. It's not here. I mentioned the pawning. Pawning is a consumption loan. It is as pledging the jewelries to the bank, and certain percentage of the value of the jewelries will be given as a loan. Maximum period is 1 year or 6 months. There are two types of products, 1 year loan or maximum. So interest may not be serviced. This loan is once and for all settlement, normal. But now, after 1990 amendment to the Mortgage Act, the banks are allowed to accept part payment and maintain a ledger. Therefore, they are only a ledger earlier. So there's no risk at all in the pawning sector because the pledge, the possession of the article of the jewelry is under bank custody. The only risk is if the bank has not carefully verified the purity of the gold. So that's the responsibility of the bank. Bank has to clearly identify the purity of the gold. Gold is a mineral product, mining out from the sand. So always there's a certain amount of dust in the gold. That's what the gold is international value as 9,999.9% purity. 999.9% purity. This is not 100% purity. There can be one particle for 1,000 can be dust. So testing methods there are two methods we are using normally. One called grindstone method. Other one is densimeter method. Evaluation of this product, two methods, right? Densimeter method and the grindstone method. There's a conventional method. This is the grindstone method. Grindstone method is the banks or the lender will take a sample onto a grindstone, scrape in the gold product, gold article on this grindstone, and apply a chemical called nitric acid and salt, mixture of nitric acid and salt on the sample. Then with this nitric acid solution, will react on the gold. Right? That will burn. The reaction timing will be guessed by the banks or the lender. If it's pure gold, that means 24 karat gold, purification 24 karat is 916 uh, part of the gold for 1000. So those golds are called pure gold. It takes longer time to get black color or get burned. If it's diluted or you call alloyed other metals, then it will burn quickly. So depending on that only, that method is used. Now this method most borrowers don't like because every time you go for pawning, they'll scrape, the value of the gold will be diminishing, reducing, slightly reducing. Therefore, they won't willing to do this. To overcome this situation, bank has applied another method called densimeter method. So densimeter is work on Archimedes principle. Value is equal to weight. The weight is equal to the volume. Volume is equal to weight. That's a concept. Archimedes concept. Bara samana skandhe. When you put an article into water, say a bowl of water there in that densimeter, when you put the article into water, it will spill. So whatever amount spilled is electronically evaluated and given the valuation, how much of gold percentage is there in the, that's the method we are used in the densimeter method. So densimeter, to work densimeter clearly, there are certain conditions, number of conditions. The place it has been kept, table which has been kept, the noise and other, what you call other vibration of the environment will all affect. Then the caliber of the water, caliber of the acid, everything is affected. Further, densimeter is not accepted weighing machine by the measuring and weighing authority. You know, according to the law, every weighing machine and the yardsticks has to be certified by the certified by the weighing and measuring authority at the municipality. The control of weighing and measuring at the municipality. Now, this municipality will not give certificate for densimeters as a weighing machine. You can weigh it, but it is not an authorized weighing machine. Therefore, banks has to use the traditional electronic machines or scales. So there are a number of other activities I don't need to discuss in this class because it is very long about how to operation of this product, how to do the operations of this product, and normally it's 1 year given. After 1 year, within reasonable period, it has to be redeemed or remortgaged or pledged. So long term is a very popular product, and there are certain other legal requirements about the holding, like auction and all. How to careful about the fake articles, and when you take a fake article, what is legal action? How you can take? All this I understand carefully. So basically, pony product is a product very popular among our countries, Asian countries. It's called gold loan. Different names are given because it's very simple, a very easy process. There's no documentation. There's no evaluation. There's no income certificate for on the borrower. All other activities which are going for Borrowing is not applicable in this borrowing. It's straightforward. Okay, so that's called consumption product is the pledged loans. So what are the types of loans? Different types of loans. Short-term loan, term loan, medium, long-term, short-term, term loan. That's, that is depending on the period, it is becoming short-term. Now, type of advances also linked with the need of the customer. When you talk about the need-based finance, it's not here. When you talk about the need-based finance, what are the customer needs? Commercial customers' needs are three types. One facility is needed for long-term facility. Long-term facility. That's called long-term facility needed for invest in the capital items, purchasing of properties, infrastructure development, refurbishment of the properties or the buildings. Likewise, long-term finance. It has to be backed by a property mortgage. Normally, facilities are going 7 to 10 years. These long-term facilities are given for capital investment. Investment in the capital, purchase of capital items. Then come the medium-term loans. Medium terms also given for purchasing of capital item, but are not long term. It is medium term. What are the products are involved in the medium term? Buying of vehicles, motor vehicles, buying of motor vehicles, furnitures and fittings, and machineries, motor vehicles, furniture and fittings are capital item. These are given medium term loans. Maximum will be 5 years, minimum is 3 to 5 years period. Then comes the short-term loans. Short-term loans are normally given for 1 year or less. Maybe it can be revolved or straightforward. The short-term loans are given for basically for working capital requirements. Short-term loans are given for the working capital requirement of the customer. These short-term loans also there are two types of loan. This called working capital loan. One is permanent working capital. Otherwise revolving working capital. Permanent working capital and the revolving working capital. Permanent working capital is given for purchase of raw materials and investment in debtors. Investment in debtors and purchase of raw material is given for facilities 1 year or maybe. Then comes the revolving credit facilities for working capital finance. What are these finances? That is finance for day-to-day operations. Purchasing, cost of goods sold, then expenses, day-to-day expenses, manufacturing organization, work in progress. These are revolving facilities. The facility is revolving. Normally, banks will give a permanent overdraft for this facility. It's a revolving facility. Right. Then comes to loans, import finance. Little while ago I discussed the item. Import finance. Right? And import finance we are giving pledge loans, hypothecation loan, and trust receipt loan, and series of loans. Okay. Some of these are direct import. These are directly involved for the imports. Whenever customer imports goods, he had to settle the bills. To yeah, we had to settle the bills to get the goods from the ship, the port. Normally we call this a retirement of bills. To retirement the bills, he had to pay. He had to pay for the to take the documents. But if he had funds are not immediately available, he can arrange with the bank to get a loan. So one type of facilities for import trade is TR loan or trust receipt loan. Trust receipt loans are governed by TR Ordinance 1942, TR Facilities Act 1942. The principle of trust receipt loan is the underlying imported goods are given to the importer on trust. No documents, no collateral. Only document is trust receipt bond, TR bond. Under trust receipt bond, the importer accepts to sell the goods and pay the loan within given period. Maximum 6 months are given. Right? It's a TR facility. Within 6 months, he will be settling. The goods are given on trust. No other collateral. Now the TR loans specialty is under TR ordinance, goods are given on trust. Therefore, any default by the importer is treated as breach of trust. Any default is treated as breach of trust. So breach of trust is a criminal offense according to law. Therefore, default of a trusted loan is becoming a criminal loan, whereas all other loans are security backed, they are civil loans. Under civil law. So only instance where the loan is coming criminal offense is under TR facility. According to the TR ordinance, if any importer defaults the facility, first the bank has to recall the goods given on trust. That means importer has to return back the goods which are given on trust back to the bank. Failing on which, bank can take action. What's the action? Bank can lodge a complaint in the police that we are given this stuff on trust to this person. He has breached the trust. So therefore it's a criminal offense. And in turn, the police will file action in the magistrate courts under criminal action. Breach of trust. Right? Now, we had to produce evidences to the courts. Bank has to produce evidence to the courts about the transaction, TR bond and other documents. Police will file the action, take up the action. If the importer found guilty by the magistrate, it says in the Act 3 years rigorous imprisonment and 3 times of the value of the goods can be claimed as damages. He can be sent for 3 years rigorous imprisonment. So that is called TR facility. Okay. There are some TR facilities are there, local TRs. It's called local TR, local trust receipts. Basically, trust receipts are in the import trade. Local TRs also same principle. If customer wants to purchase certain merchandise, bank will purchase the merchandise and give to the customer under TR agreement. and customer can pay back the loan after selling that good stuff, and they have to pay back the loan. So it also applies in the TR facility. Mostly this local TRs are applied in the purchasing of paddy and other crops at the instead of pledge loans. So operating is very easy, convenient than a pledge loan. Yeah, so most of the instances now practicing banks going for local TRs. Simple documentation, simple application. The second types of import facilities called hypothecation loan or can loan or overdraft. What is hypothecation loan? Hypothecation loan, yeah, hypothecation is mortgaging. Right? Hypothecation means mortgaging, that in the terminology. So in other words, it's a facility which is the uh, assets are the goods are kept as security. Okay. Hypothecation loan, same as TR, when the import stuff merchandise received to the port, if the customer does not have money to clear the goods, he can ask for a hypothecation facility. In the hypothecation facility, bank will retain the title document. Bank will retain the title document. That's called bill of lading. Bank will hold the bill of lading and release the goods to the importer to sell and pay back the loan. The TR, there's no documentation. Everything given, only the TR document. Hypothecation, bank will take over the, keep held in the custody of the uh, bill of lading. So bill of lading is a title document. Whoever having the bill of lading have the title to the merchandise. That's the law. So bank is holding that document called hypothecation. Right. If the loan is defaulted by the hypothecation loan, same as TR, bank will recall the loan. The what do you call the goods are given to the customer to return back. If the customer unable to return or he had not returned, default of returning back the goods, then bank has the right to take the possession of the goods, whoever's hand it may be, and whatever possession it can be. In other words, the importer may have sold these goods to somebody else. Right? The person who bought the goods does not get the title to the goods. It is mortgaged to the bank. Okay. He's not getting the title of the good. Therefore, bank has a right to repossess in whoever's hand it be, in whatever position. If it's a manufactured raw material, if you put it in manufacturing, the manufactured items can be taken into custody by the bank. You can see how it operates. Import loan. The third import loan is a pledge loan. Pledge loan means the the underlying imported goods will be kept under banks and customers control. That means the stuff will be put into the warehouse, bonded warehouse, right, and padlocked by the bank as well as the customer. So whenever customer pays off the loan facility, bank will release the goods. Hypothecation loan more what you call secured because the If the customer defaulted, bank can take the goods and sell the goods and recover the money. So these are three types of facilities in the import trade. The series of loans are come with the hypothecation loan. That means customer may import with one LC, with one whatever opening of letter of credit, in the merchandise in different period, different stocks. So that will be covered by a series of loans, right? For example, if you have $100 million worth of LC has been established, the first there will be 10 million. So loan will be given for 10 million. So second installment comes another 10 million. Likewise, up to 100 million, the series of loans can be released. Bridging loans are normally in housing loans and other facilities which are given to bridge till the loan is approved. Customer loan application is given till it approved and come back. When the customer needed funds, a short-term finance can be arranged. It's called bridging finance, bridging loans. Mostly it's happening in the large activities where customer is expecting money from the loan, which has when they delayed, he will be entertained with a short-term facility with a bridging loan. Once a loan is granted, bridging loan will be recovered. That's called bridging finance, bridging the gap of the timing. The foreign currency loans are, of course, when the exporter needs, the importer needs currency loan, foreign currency to purchase certain merchandise. So bank will extend foreign currency loan backed by foreign currency stocks in the bank. Normally, foreign currency loans are entertained with the exchange controller's permission wherever needed for foreign currency only. Otherwise, normally in Sri Lanka, we give only rupee loans. Foreign currency loans are given to pay for in foreign currency in a foreign country, right? Then export packing credit loans mean packing credit loans are there are for export credit there are two types of loan facilities: pre-shipment credit and post-shipment credit. For export customers, there are two types of products are available, right? That is pre-shipment credit, post-shipment credit. Pre-shipment means before the shipment, if the customer needed facilities, bank is giving facility, it's called packing credit facility. That pre-shipment credit is called as packing credit loans or overdraft facility. It can be a loan or an overdraft. What is this packing credit limit means? When the customer exporter gets a confirmed order, right? Uh, Irrevocable letter of credit to export certain goods. Since till his export the goods, he need working capital. He needs finance for manufacturer process or to collect the goods for exports. To manufacture or to collect the goods, he need finance. So he can keep the give the LC letter of credit, an irrevocable letter of credit, to the bank as a what you call collateral and ask for a facility that is called packing credit loan. When a packing credit facility is granted, the maximum period will be up to the date of shipment. Packing credit facility up to the maximum period is up to the time of shipment. So when the shipment is ready, banks is involved in the shipping procedure, hand over the goods to the shipping or shipping agent, right? Get the bill of lading and settle the facility. right? Bill of lading is taken in the custody of the bank, and with the export proceedings, the loan will be settled, right? So bill of lading is under the custody of bank, and all the documents bank will take into custody, and that will be sent to the importer's bank for negotiation. Once you negotiated, reimbursement will be done by the import bank, then the loan will be recovered. So the period maximum is given up to the time of shipping of the goods. Right. So other products is loans, overdrafts. That means overdrafts are three types of overdrafts are there. The casual overdrafts. Yes. Casual overdrafts, casual overdrafts, permanent overdraft, temporary overdraft, and casual overdraft. The only two has been shown here. Third one is casual overdraft. Permanent overdraft is a facility with a permanent arrangement. That means with a permanent loan overdraft agreement has been signed by the customer, assigning a collateral and given for a period, normally 1 year, and it is renewable, reviewed every year, with backed by a collateral. Permanent overdrafts are permanent limit given. What is overdraft? First of all, we discussed that. Overdraft is a facility where customer is given exceeding his credit balance in the current account. Any amount given is called an overdraft. Overdrawing the balance is called overdraft. So to get an overdraft, customer should have a current account. Overdraft is exceeding the current credit balance. Anything given is called overdraft. When you arrange for a facility, that means permanent facility, a limit has been given to the current account. For example, 100,000 rupees with a backed by a permanent security document, and customer can draw checks beyond his credit balance up to that level maximum. That's called permanent overdraft. Temporary overdraft is, again, customer needs short-term finance. Take for example 2 weeks or 3 weeks or 1 month short-term facility. So customer has to make a request. Current account holder has to make a request to the bank that authorize a temporary facility. So on the request of the customer, if his creditworthiness is established, bank will mark a limit again for a short term. For a short term, maximum would be, depending on the manager's delegated authority, 30 days or 15 days or likewise. Within that, so that limit can be used by the customer up to that date. The third one is casual overdraft. It's not here. That casual overdraft is customer may not request a facility, whereas a bank decides. The customer check has been presented for payment, but the funds are not sufficient to pay the check. Bank has two options: either return the check or honor the check. Right? If the customer is good customer, creditworthiness established, and he may not default, if a bank think that, so bank at his discretion give the facility, is called casual overdraft. Casual overdraft doesn't have a time. It has to be paid immediately on the following day or so. When the customer was informed, he had to settle it immediately. There's no time bar for casual overdrafts. Okay, so these are the types of advances. Right. Some other facilities are there. This is called indirect finance or fee-based products. Now we discussed earlier the types of advances. All these are fund-based products. All these are fund-based products. Now comes to fee-based product. Bank guarantees are bonds are fee-based product. It's basically called letter of guarantees. Letter of guarantee, and there are two types of guarantees. Customers are given the guarantee for different purposes, for commercial purposes and for tender purposes. It's called tender guarantees, right? Letter of guarantees are given for finance guarantees or performance guarantees. Letter of guarantees are two types: performance guarantee or financial guarantee. Tender guarantees are there are T-type guarantees which are given for tenders to apply for a tender, given the facility called tender guarantees. There can be uh, tender guarantees are three types: bid bond, performance bond, advance payment guarantee bond, retention money bond, and maintenance bond. So these are called other types of tenders. Okay. Letter of guarantee. Description of letter of guarantee is not given here. Okay. I'll get this one for you little in details with my slides. I think I have got the slides in detail about guarantee, types of guarantee. So we can discuss that one. You can take it out if you want to get one. The types of guarantees. Okay. So today I think I can stop at that level. We'll continue next week with the other facilities, the guarantees, and we'll continue with the slides say in the handout. Okay. Any questions?